Hey everyone, and welcome to this explainer. Today, we're diving into something seriously unique. We're going to break down the anatomy of an asset by deconstructing the Ma-Ze-Uyi investment brief, specifically looking at their updated Draft 14. We're going to see exactly how incredibly deep creative world building collides with hard, calculated venture capital metrics. It's a fascinating mix, so let's get right into it. Honor is not inherited. It is chosen. Man, what a striking way to set the stage, right? We're starting with this quote because it instantly establishes the mythic yet completely grounded tone of the Ma-Ze-Uyi universe. I mean, we aren't just looking at a standard dry business plan today. We're actually stepping onto a meticulously designed fictional continent that's literally the size of Africa. It's populated by 10 distinct nations, and get this, each one has its own documented physiology, economy, and material science. So, here is our roadmap for the breakdown today. Number 1, we'll look at the build-first advantage. Number 2, convergent market signals. Number 3, the 5-year roadmap. Number 4, the foundational ask. And finally, number 5, we'll cover the 3-tier investor returns. All right, kicking things off with Section 1, the build-first advantage. Intellectual property before capital.
You'll notice a stark contrast here. Usually in the entertainment and IP industry, it's all about speculative pitching. Basically selling a world that doesn't even exist yet, writing mostly on hope, maybe a few cool concept sketches, and a really big promise. But Ma-Ze-Uyi's creator took a totally different route: disciplined development. The entire continent has already been drawn. The biological systems, the local textiles, the intricate cross-cultural trade routes, they've all been built deliberately over years, way before a single dollar of outside capital was ever sought. The narrative Bible, it's already written. And why does this matter to you as an investor? Well, because it creates a massively de-risked foundation. It makes this a tangible, functional reality rather than just some pie-in-the-sky speculative idea.
And this perfectly captures exactly what kind of world they've built: mythic Afro-science fiction. Now, this isn't just some catchy marketing label. It's a distinct genre designation that completely sidesteps the usual tropes you see in high fantasy or typical future tech sci-fi. Because actually, there is no magic here. There are no spaceships flying around. Every single extraordinary capability in this world stems from a real biological, geological, or ecological cause. To give you an example, one faction has an invisibility cloak, but it's not magic. It relies on the actual optical properties of their skin pigmentation interacting with the pupil morphology of whoever is looking at them. It feels mythic to the characters, sure, but it operates on strict cellular biology. This gives the IP a completely unique structural advantage, basically letting it occupy a massive space in the market that no major franchise currently holds. Moving on to Section 2, convergent market signals. Why this market? Why now? Here is the absolute crucial point. The audience for this IP is already out there. Just look at these 3 converging market signals from the past decade. First, you've got the Wakanda and Black Panther films proving that the mainstream global appetite for Afrofuturist storytelling is absolutely massive. We're talking over $2 billion in box office revenue. Second, Tommy Ayemi's novel Children of Blood and Bone provided incredible literary market validation, showing us that the publishing industry is more than willing to pay top dollar for Afro SFF. And third, Brandon Sanderson's jaw-dropping $40 million Kickstarter proved that the direct-to-audience funding model for deep, expansive world builders works, and it works at scale. These aren't just isolated events. These industry trends are actively converging on this exact moment. They prove the audience is hungry for this exact kind of composite position, and most importantly, they are ready to spend their money. Let's look at Section 3, the 5-year roadmap, from foundation to persistence. You really have to follow the strategic brilliance of this sequence deployment. It starts off at a very grounded, manageable pace in year 1 with Novel I, which defines the universe and starts building that core foundational audience. Then, year 2 ramps up and diversifies with 3 commercial games, progressing from a low-risk puzzle game to a richer interactive narrative game right up to a highly technical fighting game. By year 3, we get Novel 2, and they kick off MMO pre-production. In year 4, development shifts into heavy gear with full, massive multiplayer online game production. And then boom, year 5 closes out the arc with Novel 3 and the massive commercial launch of the MMO. The energy and scale literally build year over year. It graduates from a single literary product to a persistent, massive digital universe, totally ensuring that every major milestone is financially and socially supported by the success of whatever came right before it. Now for Section 4, the foundational ask: capital to activate deployment. 233,000 Canadian dollars. Just let that number sink in for a second. This is the round 1 foundational ask that's currently raising on a private investment platform.
This represents the basic operational capital they've identified to activate their 11 specialist team for years 1 and 2. It covers salaries, the production overhead for Novel I, and the infrastructure needed to run a year 1 Kickstarter campaign. You know, unlike typical tech startups that burn through millions of dollars just trying to scrape together a minimum viable product, this capital simply hits the go button on a world that's already completely built. And right on the heels of that ask is our second key figure, a $7.77 million valuation cap for this round. That represents roughly a 3% conversion for the investor at the cap. What is absolutely critical to grasp here is that while the total 5-year operational capital requirement sits around $2.1 million, securing this initial $233K completely changes the game. Why? Because subsequent crowdfunding campaigns rapidly shift from being required survival capital into additive scaling capital. It bolsters their reserves and accelerates all the downstream productions from a position of profound operational strength rather than desperation.
Bringing us to Section 5, 3-tier investor returns, aligning capital with franchise growth. So how do investors actually make money here? Well, here's how they participate in the value created across every single product in the franchise. Step 1 is product-specific royalties, meaning as each individual product ships, whether that's the novels, the games, or the MMO, investors receive defined, calculable returns directly tied to that specific product's commercial performance. Step 2 is the portfolio revenue share. This ensures you're participating in the compounding, long-tail value of the entire IP. Think film options, merchandise, or big licensing partnerships down the line. And step 3 is direct negotiation with the creator. This means participation levels and return structures can actually be aligned directly with each individual investor's specific risk tolerance and capacity. It's just a highly diversified, really smart approach to structuring returns. Which brings us to our final thought for today's explainer. Is the convergence of a fully built IP and a proven market appetite enough to guarantee transmedia success? It's definitely a provocative question to weigh, isn't it? On one hand, you've got this incredibly robust build-first foundation that practically eliminates the risk of a poorly designed, rushed world. But on the other hand, executing a 5-year multi-platform rollout, spanning books, multiple game genres, and a massive MMO that carries its own inherent execution risks and a definite reliance on crowdfunding variants, it is a fascinating proposition that pairs deep, passionate creative conviction with highly disciplined venture strategy. I really hope this explainer gave you a crystal clear understanding of the anatomy of this asset, and I hope it left you just as curious as I am to see how the Ma-Ze-Uyi universe unfolds from here.